Hit it.
It's September 25th, 2020, episode 98. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome to the show oil specialist and internet sensation Tracy Shuchart, otherwise known as Shy Girl.
Then we get into this week in trading history, where we go back to the gold corner of 1869. And unfortunately, there's no WTF clip of the week this week. But before anyone gets upset, it's Lena's fault. But anyway, then we get to our new segments of No Stupid Questions and Skin in the Game. And Kevin, we might even drink some beers along the way. So stick around, everyone. We got a great show. Lena, hop on. Who's the beer sponsor this week?
This week we are drinking Signal Brewing Company's Radio Tube Pilsner.
All right.
So while light and refreshing, Radio Tube packs a ton of flavor, delicately combining gentle notes of biscuit with a pleasantly bitter hop character. You can enjoy it with grilled halibut served in a creamy dill sauce on the patio.
You know,
sorry, Patrick, it's a little sophisticated.
I don't know, but it tastes delicious. Like, this is a nice, easy drinking beer. It's I like it.
I feel like you say that about every beer every week.
I know.
This is a Pilsner. This is no. I'm sorry. Like, we are out of the IPA territory all of a sudden here. This is what is the percentage here? Hold on, 4.5%. This is like a light beer. This is
it's a light
great
beer
tasting.
To my 11%.
It's
like
sessionable.
Yeah, and you know, Lena, you might be sober by the end of the show still.
Yeah, I might need another one actually.
All right, Kev, give us the disclaimer, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the ECB heebie-jeebies, the EV HPV, and the six packs. I like the EV
Many
HPV.
abbreviations.
You know, there's a Honda car that's actually it's an HPV, and I'm like, that's it. Yeah, or no, isn't there like another one? I think it's the HPV. Anyways,
I don't know. There's
terrible. Somebody didn't know what they were doing. Okay, on with the show.
On with the show.
It's our pleasure to welcome back to the show the internet sensation, Shy Girl, Tracy Shuchart. Welcome to the show. It was great to have you on again.
Absolutely. Thanks for having me, you guys.
It's going to be a lot of fun, but before we get to it, you have some announcement. You up until now, you've basically been on Twitter, and you're a rock star on there, and you also go on to TV. I've seen you on Bloomberg and maybe even CNBC once or twice, and you're going to expand your job, and you're no longer just going to be Twittering. You're going to actually be writing. Why don't you tell us what you're up to?
Yeah, absolutely. So I will be the commodities and energy basically analyst at Hedge Fund Telemetry. So that will be a new thing for me. That should be up and running next week. So if you guys want to log on, it's just www.hedgefundtelemetry.com. You can sign up for a free 2-week trial and kind of check out what I'm doing over there.
So that's Tommy Thornton's paper, right? Right.
Yes.
So you're going to have to learn all about DMARCs.
Well, we have a little bit different trading style.
So there's going to be no DMARCs for you. Okay, so let's get to it.
No DMARCs on mine.
Okay. So let's get to it. Let's talk about oil, because that's what you're known for. Well, before we were chatting, you said that you have a little bit of a conspiracy theory about oil.
All right. Well, okay. So, all right. So you see, yeah, I mean, basically, we went nowhere since like July 4th, essentially. Then we had, finally we broke out of consolidation. We came down a little bit. Oil's popped right back up. Everybody's thinking that because, they're having more shutdowns in Europe, and, OPEC recently increased their production a little bit in August. And there's a million reasons you could be very bearish this right now. However, I'm not bearish this actually at least in the medium to long term. But, normally we at this point probably would have been at 30. So here's my conspiracy theory.
Okay.
Last OPEC meeting, right? When they asked Al Fahil like, what do you think about people trying to short this market? And he said, go ahead, make my day. I think kind of like there's, how there's just kind of that invisible Fed hand in the market. I think there's a
Right.
little bit of an invisible OPEC hand in this market. So I
And
don't think that, I just don't see this, I just don't see oil crashing to where people think that it's going to go. I think, we're just not going to see the level of, I've seen levels all over 30, 25, whatever. I just don't think we're going to see that this fall.
so he's the dirty Harry of the oil market.
Yes,
One
I
of
mean,
the
he
things
literally said that. He literally said, "Make my day," when they asked him a question about short sellers in the market.
Well, Tracy, let's talk some short-term technicals. I mean, if the market here remains weak, I mean, I guess oil could have some sympathy pains. Do you think a retest of like $36 or something like that is out of line here? Or do you think it's more your medium-term thing is going to be the trend from here, where we start just seeing us work our way back up into the mid 40s?
I mean,
What's your
I could kind of, I mean, I could definitely see a pullback, and really, if they started shutting down everything again, market could see 30 pretty easily. But I mean, right now, I mean, this this, but I don't know what do you, this daily, you have the daily chart on? Oh my
yeah,
god,
yeah,
I can't
yeah,
even read. I mean, that looks kind of bullish to me.
yeah.
I mean, that looks like a bull flag, right? Um,
Right.
so,
Yeah, but it could still zigzag
oh
and
yeah,
retest
absolutely.
the 30s.
Yeah, or we could spend another 3 months and
Just
another two
sideways.
dollar range, right? So I'm
Yeah.
just thinking, I just think there's a little bit of an invisible hand in this market right now, and we're just not going to see that, plunge that everybody's expecting this fall.
So Tracy,
What do you?
Kev here. Oh, sorry, Patrick.
Yeah.
I want to just jump in there, Patrick, on this idea about that everyone's expecting a plunge. And one of the things that always astounds me when I talk to people who specialize in oil trading is that they're always so bearish.
They
And I
are.
just like,
They
what is
literally,
with you guys?
I don't
Why
know.
are you always thinking it's going to zero?
You know what the craziest thing is for 5 years straight, I was the biggest bear ever and the biggest oil bear ever. And literally, this is the first time in 5 years I'm actually bullish this market. Not kidding.
And
There you go.
and why is that? You're just thinking that the action's telling you that
I mean,
it's
I think that we already had that giant washout. And I also
Yeah.
think that because of all the production cuts, because of all the capex cuts, and all of the things that happened, during the shutdown, that we're going to come into a supply crunch, whether that's in a year or 2 years. We're going to have a severe uh, supply problem, deficit, in my opinion. So I'm actually bullish this market right now.
So,
It's
well,
crazy as that
sorry.
sounds.
yeah.
I feel
So
like I'm in like an alien skin right now because
yeah,
I'm
It
what,
is
what
2020 and everything is messed up this year.
So Tracy, what I wanted to see if you had an opinion on, oil during the summer, like July and August. Well, you don't want to really call it going up, but it kind of crawled in an upwards way and really was stable. But really, it was early in the summer where the energy companies themselves peaked out.
right.
And some of these energy companies have gotten down to the levels very close to where they were when we were talking minus 40 oil, right? Like
Absolutely.
ExxonMobil is a stone's throw. And how do you make sense of what's happening in the energy stock and the energy equities
I
versus
mean,
that of the market?
I think there's a lot of there's more negativity there than there is in the actual oil market. And I think the problem is that, everybody knows a lot of these shale companies are hurting. They were actually hurting before COVID came along, right? I mean, in December, yeah, I did something for Real Vision. I was talking about, all the mergers and acquisitions and bankruptcies that were going to happen this year. And, COVID just exacerbated that problem tenfold. So, I think people are looking at um, how much these companies are struggling. I also think, the ESG movement is so huge right now. Everybody's, we're we're never going to use oil again. Everything's EV. Everything's going to change tomorrow, which is really not the case. And not that I'm against, renewables or alternative energy. I think that's great. It has its place in the market, but let's be honest, that's been a push since the 1970s. 50 years later, we're still here. Not that I think that it's still going to take another 50 years, but you got to be a little bit realistic about the situation. So I think there's just a whole, negative viewpoint, within not only just looking at these companies individually, but also from, a investor standpoint. And, because you have also some of these banks like, Goldman and, they're pulling back on financing oil and coal deals and things of that nature. So, it's kind of the mindset of the community right now. So
Tracy,
that
it's
has
Kev here.
helped. Yeah.
Isn't that pulling back on the financing exactly what we need in terms of getting prices higher?
Yeah, absolutely it will.
Right. Like it's I look at it, I'm in your camp. I see a situation where everyone's excited about this move to EV, but if we underestimate or overestimate how quickly we're going to do it, and then all of a sudden we're all still needing oil at a
Right.
time when capex has been dramatically cut, and that we kind of take it for granted that we could just go put in the stick something in the ground and find oil. But the reality is that took a lot of capital to do it, and I'm actually
Exactly.
worried that we could get a monster rally. I say that we could see triple digit oil easily. What do you think?
I mean, I think that I've talked to other people that say that too. I definitely could see us getting back to 80s easily. Not tomorrow, so people don't yell at me on Twitter. Not tomorrow, okay?
Right.
I'm
But
talking, in the future. But yes, absolutely, I agree with you. Like I said, I feel weird. I haven't been an oil bull in over 5 years, so I'm actually a
And,
bull now.
and so I guess the crux of your argument is that the kind of the behavior of the companies has changed. Would that be why you're a bull?
Well, I think behavior of companies changed. I think and again, I think it's gonna the nature of all the things that happen, all the capex cuts, all the things. A lot of these, with shale, you have to constantly be drilling new wells, right, to
Right.
replenish, because they don't have a lifeline like deep oil does. And so, since everybody either stopped drilling or pulled back on capex, we don't that pipeline isn't full, right? You can't just
Right.
turn on that pipeline. It doesn't work that way.
So you mentioned people yelling at you on Twitter. One of the things they've been yelling at you over the past few months is your U.S. dollar bull position. And it
Right.
looks like you're finally getting your day in the sun. What's happening there?
Yes. So, actually, I've been a dollar bull, and people say, but it's going down. But actually, if you look at, I've been, long against like the Brazilian real, uh, against the Turkish lira, against the ruble. All of those been really good trades since June. And that's long dollar against them. So, that's still being what people don't understand is you can still be long dollar against, another currency. And,
It doesn't
it,
have to be the majors.
right.
There's lots. There's lots of
There's
there's
lots of,
lots of currencies. The dollar's been going up.
exactly. So that's the
Right.
point. But I actually am Sunday nights, actually outright long dollar futures.
Long
nice.
dollar. Okay, so tell us why.
So because if you look at that, okay, see that the daily chart, see how we
Yeah.
have a rounded bottom there, and then you have that little, it's almost like a cup and
Like a,
handle, but not fully. So you have a rounded bottom, right? So we're putting in a bottom, and then we had that little bull flag, and so Sunday night
yeah.
on the open, I got long immediately. Do you see where I'm talking about? Right there.
Yeah, right.
So Tracy, I got to interrupt. You're talking about a rounded bottom with that little bull flag. It's making me feel a little squeamish.
Some people will call that inverted head and shoulders. There's
I
all
know,
sorts
but
of
I hate
names
head
on
and
it.
shoulders.
Ah,
so
Patrick, you
badly.
didn't
I
get
know.
my joke, but that's fine.
I know,
Okay.
but it
You're
is
just trying to keep it clean. Not trying to keep it clean. I thought she was talking about me. Okay, so so it's technical in nature. So you've been bullish on the dollar. Is it kind of
I
is
think
the
it's.
thesis the fun?
I
Sorry, I
mean,
didn't interrupt. Is it?
Go ahead.
Okay, we're stepping all over each other.
Right?
Sorry, the joys
Oh
of
my God.
the joys of doing it without visual. So is it a function of this whole credit destruction and, in a bad time the U.S. dollars have to be paid back? Is that what's fundamentally driving it, or is it kind of the U.S. is the strongest economy out there and will continue to be the strongest, and people need dollars? What's
I think
driving your dollar bullishness?
it's the combination. It's a combination of that, and it's also a combination of emerging markets. I mean, I've been posting a lot of stuff where I said there's a dollar shortage, right? And it's not necessarily, and we're not talking onshore dollars. We're talking offshore dollars in like the euro dollar market and things of that nature. So we've been seeing a shortage, even though USD has been going down, which really is just the inverse of euro. I mean, most of it, most in that basket, it's mostly euro. Um, but so we've been seeing dollars like this has been building, and then add on top of that, you couldn't be more short dollar. I mean, CFTC was you couldn't be more short. I mean, the boat's
You
overloaded,
mean
right?
the speculators
Yeah,
had pushed their luck.
exactly.
Yep.
So I mean, the
Right.
boat's overloaded. Short. Look at European economy. I mean, really? Come on. Our economy is doing much better, even though, everything's not great. But yeah, so I mean, I think there's just, a myriad of reasons to get long the dollar. And then technically the chart was screaming, get long to me. So I
Yeah.
did.
So you got long. So Tracy, you said our economy, and I was wondering. I thought you were a transplanted Canadian.
Okay, I know. Oh, I
It
can't
sound
say it. I'm sorry. I feel like a torn in like two different worlds. The
so
U.S.
so you
economy. Yes. I
the
mean, I
U.S.
know. I'm
economy.
here
No,
too. I'm like,
the
I'm like,
how are you enjoying? Like, how long have you been in Canada?
I've been in Canada since 2016 now. So 4 years.
Okay, so 4 years. So now you can actually give us some. Like, it's been long enough. You've seen the good and the bad of Canada. Tell me the thing that surprised you the most and the thing you missed the most.
Like, okay, I miss
So what surprised you the most? Like milk in bags? Is that one of them?
that was kind of weird. Yeah. That was definitely weird. Um, yeah, I never saw that before. But I mean,
And
most of the stuff is pretty much the same. I don't know. I don't know. You have better, like the drugstores, like
I thought
Couche-Tard.
you were going to say drugs.
No, well,
I thought you were just going to
no.
say you have better drugs.
What? No.
And you know what? Vancouver actually was rated by High Times the number one kind of destination in the world one year.
Oh, well,
So we
all
probably
right.
do have better drugs as well. But okay, our drugstores are better. Yes. So do you have Shoppers Drug Marts in La Belle Provence or no?
No.
No. So what do you have? Oh, you have like Jean Couteau's or something, right?
Yeah. Jean
And
Coutu.
those are better
Those
than
are
those are
awesome. Yeah,
better.
because they have like real makeup brands and things like that. Like the department store brands in the US are actually in the drugstores here.
Ah,
Oh.
nice.
It's a girl thing.
Okay, so
That's
Right?
it's a
important.
girl
You
thing.
feel
Yeah.
me? You
Like
feel
you
me?
lost me. Like I'm like. Yeah. Okay, so the other thing you love to talk about is platinum
So
and
yeah,
platinum.
you know me. I like platinum. I like it because it sets up really nice for trades, like technically speaking, right? So it does a lot of flag plays and everything. So I think I really like this like a little bit lower. Like if we could get to like 797, see where that kind of where an HVN would be right to your left. Yeah, where all this is. Yeah, yeah,
Whoa, whoa,
yeah.
whoa!
So
Well,
if we
I
could,
was 1 second. You're
I
talking
volume
to a
node.
technical.
I volume node, buddy.
Okay,
Just relax. Okay. Just
Tracy.
keep
I
going.
don't know anything about
no, that's
technicals.
good, right? That was perfect where
HVN
you
sounds
That was
like
perfect where you
sexually
were.
transmitted
So
disease. You don't want
yeah,
to
that
get.
was perfect where you were. So if it could come back
Okay.
down into that area, I think that would be a nice little play there.
Okay, so you're looking
I'm
to
in.
get long platinum. Patrick, what do you do? Give me your voodoo magic on this.
Well, listen, no, she's just identifying a key support resistance level. I like it. But you also, what's your take though on silver? Do you think silver's gotten a bottom in here somewhere?
Okay,
Or
silver,
how,
I think, and nobody's gonna like me for this, but really, if you pull the fib from low to high, I really like, and then see where the 61.8 lands around
19?
1850 area, because that's another area where there's a lot of volume. I mean, I
Yeah.
think that would be like just a gift.
It would be a gift. I don't think
Yes,
you're going to get a gift though. But anyway,
but hey,
it
that's
would be
where
a gift.
that's where I'm looking.
Yeah. Oh, that's cool. Anything else that's on? There's your high volume nodes right there.
There you
There,
go. See,
Yeah.
you're like,
There
there.
you
yeah,
go.
okay.
Anyway, what else are you watching?
Really, I mean, that's really been it. I mean, some of the grains are doing really well, although I completely missed that trade. Um,
The what's your take on the stock markets here? So the S&P's been in this correction
right.
for several weeks now. Do you think this is just a buy on dip correction, or do you think that this could take a life of its own on the downside?
I think that if we don't get a stimulus package here soon, that the market's going to force either Congress's hand or the Fed's hand to do something, and that's probably a couple hundred points lower.
A couple hundred S&P points.
Yeah,
And
in
so,
my
okay,
opinion.
let's explore that. Assuming that the Democrats hang tough, do you think
Right.
that the Republicans go and realize that the market might be vulnerable and give in and do a bigger stimulus, or do you think that they also hang tough because they have to appease their deficit hawks? And
I,
if that is the case, when do you think the market calls the bluff? When does the market say, "Oh, here it is"? Is it before the election?
I mean, I think it'll definitely happen before the election.
Well,
Absolutely,
we're not
because
that long away, so we're basically a month, right?
yeah, it's only a month away, and if you think about it, like October 1st is when all the forbearance and everything ends in these states. So by the 15th, lawyers are filing for evictions. So it's going to get really ugly out there and quickly if something isn't done quickly. Um
So the market sells off first or second week of
So
October. It's
yeah, I think
a
the
couple.
market's gonna it's gonna force somebody's hand to do something. I mean, the Fed's gonna have to step in, or Congress caves, and I mean, all these Congress members, they all have portfolios too. They don't want to see their stocks dive. Let's be honest, right? They are the
Don't
one
worry,
percent.
they're front running it though. They're going to be short S&Ps ahead of it. Don't worry. And
Probably.
so if
Yeah,
that
but
is the case, sorry, go ahead.
I mean, so for me, I mean, I think that's around 3,000 where we'll start to feel a pinch, and then I think around that 3,000 area, maybe even 2,800 if if they really start to get stubborn, that could happen. But I mean, I think the market's just really going to sell off until somebody does something, until somebody says mercy, basically.
Doesn't that hurt the Republicans more?
I think it hurt. I think it hurts both parties. I think they're insane right now. I think the government's completely insane. I think they're acting like children. I think it's a complete circus, and they're only thinking. I don't know how these people keep getting elected. To be honest, and I don't want to go on a political rant because I'll just get mad. But I
Well,
just
you're
think
you're a
no.
Canadian now, so it doesn't matter.
So I can. So I mean,
Are you
elect
allowed to still
different
vote? You
people.
must be allowed to.
People get these
Are you allowed to still?
lifelong politicians out of office.
But so you're allowed to still vote. You can mail it in, even though it might not be
Even though it might
get.
not get there, apparently.
That's true. Well, Tracy, it's been a pleasure having you on the show. Why don't you tell people one last time where they can find you on Twitter, and also where they should go to if they want to get your new research product?
Yeah, I'm at Shigirl, Chigrl. And then it's hedgefundtelemetry.com. And hopefully it will be set up by, I'm going to say Monday.
Great. Well, all the
Nice.
best. Tracy, I look forward to reading your stuff. It's going to be really a lot of fun.
Cool.
Thanks a lot,
Thanks,
Tracy.
guys.
Take care. Thanks for being
Cheers.
on. Patrick, it's that time. Talking charts. What do we got this week?
Wow. Let's just take a tour of the markets. What a crazy time, right? And so the market started the week selling, right? And we're now down towards the 3,200 area, more or less, where these previous highs have all occurred, and we're in Fibonacci zones of the summer rally. And so this is a really interesting place where individuals such as yourself would normally cover their shorts and go flat. Right,
I did do that.
Yeah, and so.
Well, listen, 1 second. We better interrupt here. I actually covered too early, as usual. And Patrick sent me a note. He says, "I bet you're covering right now, aren't you?" And I was like, "Yeah." And he said, "Thank you," because it proceeded to go lower. So you're welcome. To all the bears out there.
You know what? You were goochering the trade. It was going too slow because you were clogging it all up, and getting you off the bandwagon just allows it to really. Happen.
What's the most interesting about this, Patrick, is that our discussion about the market and how you told me that it was a regular technical correction was actually what triggered me, because I remember that in 1998 and 1999 there was actually 7 corrections that were roughly 10 to 15%, but never more than 20, not even close to 20, that usually lasted for between 1 and 2 weeks. And this is in the NASDAQ.
Okay, so yeah.
So once you said that, I was like, oh.
Nonsense. First of all, it's still the same bear market that started originally, and this so we have to look at bearish price action. The second thing is you have to put into reflection that corrections are usually reflective of the magnitude of the prior rise, and so with the fact that we had such a huge rise off that March low, there's so much more room for this to become a proper 15 to 20% correction. So you are going to be potentially wrong.
It's not a correction, Patrick, because you keep saying it's a bear market, so it's a resumption of the bear.
Thank you. I didn't want to say it, but you decided for me. Thank you very much. Okay, so obviously Tracy was talking about the dollar. I thought it was worth us just circling back. It is definitely a technical breakout, and the question is, do you feel that there's enough of a imbalance where there could be really a proper short squeeze, where there could be just a proper liquidity surge where this thing pops to like 97, 98 in a week? Do you think that there's something in the tank for a move like that?
No.
Nope.
So
that means it's almost over. You think 95 is 96, that this is going to just stall it out here?
You betcha.
All right. Well, maybe there's going to have to be a bet on something like that at some point. Not this week, but I think that we have something as we approach 95. Let's revisit that for a bet. Okay. So what I wanted to talk about some of the other energy markets outside of oil, because we were looking at oil earlier. But what was interesting here, Kev, was the way that the front month nat gas contract got slammed. Do you think that this was them just giving it to the UNG holders when they were doing that roll for the ETF?
I don't know, Patrick. There was definitely some weird things happening.
There is monster contango, dude. Like, I mean, this thing went to $1.80 on that front month, but you turn around and just go next month, right? Like, let's just say right now, let's go. November contract is at $2.86. It's literally $1 higher than where it was yesterday on the November contract. So that's like super contango. What else could it be?
You know, nat gas is a funny market, Patrick. I don't know. I definitely, though, when someone gets offside and someone gets squeezed or hurt on the
it's a widowmaker.
Well, yeah, like there's just nowhere for it to go. So, and we often talk about that strange time when oil went negative. Well, the reality is that natural gas is even worse in terms of when there's a problem with storage, there's nowhere to store it. So weird things happen on specific months.
Yeah. And so what's interesting, I wanted to pull up the copper chart because there's a lot of people talking about this trend line and the fact that copper finally broke that trend line. And so to me, though, this is all one big trade and it's all interconnected. When the dollar was going down and the dollar bears were so vocal, it really was pushing the reflation trade, and it really spilled into all of the commodity markets and everything was working. And I think that the moment that dollar broke out, it kind of just spilled right across the entire intermarket spectrum, and we're finally seeing these types of corrections. The question is the dollar going to have a big move, or is this all a buy on dip? And I already know what you're going to say, so don't bother saying it. But one of the interesting things is that this is now like a 50% retracement of the little August rally. So it would be the first technical damage, in my opinion. People like to point out this trend line break. I don't think it's technically significant. All of these previous highs and the retracements are so far holding. Copper could arguably turn and rally back higher off of this, and it was just noise. I'm not ready to say that was a huge significant breakdown, but I'll tell you, if it starts to gain momentum down towards 280, that's the first sign of heavy distribution that could have would more solidify a real break of the trend. I don't know. Are you buying the dip?
Yes, I am.
Okay, I knew it. It's
one of my favorite trades. I think the copper.
So, but
I was a little early. I screwed up, and I was a little early. I thought that the day before it was strong, and then it just I mistook that strength as underlying fundamental strength, and I thought that it would hold and go higher, and unfortunately, it finally succumbed.
You doing the copper equities too, though? Are you going like the Freeport and Southern and all these?
No, because I'm actually still. I prefer to own the actual metal.
Yeah, you know. Man, if that dollar rips the upside, you're going to have your face ripped off, dude.
Could be. I've done stupider things. You just watch.
All right. Anyway, gold and silver. Obvious. Silver actually dipped to a 61.8 retracement of this entire rally. It's a really interesting moment to see whether or not the silver bulls can muster up a rebound. But it's not even a rebound. Like a reflexive bounce to $25 would be par for the course here. The question here. Can the bulls do something more than that? To me, if all silver can do is muster up a bounce at 24.25, and a week later we're still there, there's more selling to come. And so I think that the bulls really have to show up and punch this higher and prove that this was a big buy on dip and get everyone chasing. And if not, then the selling's not done. But you bought silver, right?
I did. I was trading with silver, I must say.
Look at me. I'm just like I know exactly. I already know the Kevin Muir playbook. It's like I could tell you half of the trades you're in right now. Anyway, yeah. So what is interesting is I thought with this selling in the broader market, the volatility would be more responsive to the upside. And for the market selling, we didn't have no big rout. I mean, we keep going back down to like the early week lows and stuff, but we haven't seen volatility start getting, really excited to the upside. I mean, it's been very flat for the conditions we're in. What do you make of the vol conditions?
Well, it's still, it's still high, Patrick. It's 30.
It is 30.
30 is high.
It's not the teens. You're absolutely right. It's like double what it was the 2019 levels.
Right. So I don't think that it's really anything to look at and get excited about. I think that we just went through COVID and we saw some crazy levels. And so you're looking and going, it should be 70, 80. Well, those were extreme situations. I think that even here, it's still trading above the actual realized volatility in the marketplace.
Yeah.
So it's still overpriced. I just think that nobody wants to sell it because, unfortunately, we have this looming election. And so the VIX curve is all, funky, and it's basically sloped. October and November are through the roof. And I don't know if you're going to get anybody that's going to really be willing to sell that until we get that buy, until we get through this.
Oh, for sure. But one of the things that's concerning to me and why I don't know whether this market correction is over, one thing that I was pointing out last week, and I'll stand by it, I said it's not a real market correction, and the downside risk isn't going to really be pronounced until the entire global equity complex starts to turn, particularly in developed markets. And no sooner did we say that on the show did Monday come in and they hammered the Euro stock 50 to the downside, pushing it right to the bottom of like a 4-month trade range. I'm watching this because if that euro market breaks down south of 3,000 with momentum, I think all global equities can just go risk off. And,
so you think
and
that
if
the Euro stock's a leading indicator?
No, but I think that the problem is that the entire correction in the S&P 500 was just a correction in the FANG stocks and not the broader base. But if you have a turn in global equity, it's going to spill into the Russell. It's going to spill into the mid caps. It's going to actually become a much broader sell-off, and that's where the S&P's heading 3,000 or less. And
Well,
so
sorry, I didn't mean to interrupt, Patrick, but I agree with you that this week was kind of the theme of the week, that it expanded outside of just those big tech stocks.
And that was really my theme last week, which was if this is just contained to the FANGs, then it could be over. But if we see that these global indices start to break, then that means that this is going to be a much broader sell-off. And then that's when the S&P could really be down 20% at the end of all of this. And this is what I'm watching this. I'm not going to say I know it's going to happen, but this breakdown is something you don't ignore. And look at some of the other markets like this. Look at the breakdown in the India Bombay market, right? Like topping formations. Well, I know some traders will try to call that a head and shoulders, but Tracy would call it a rounding top or whatever. The point is it was struggling and then it breaks in a big way, right? And this you can see this market after market. Look at the double top on the Kospi. The South Korean index has been one of the big leading emerging market indices that's been getting a lot of money flow, and it broke, right? And to me, we don't ignore this stuff. I think that this is these are the canary in the coal mines, that there's something that could still be bigger in this market. Anyway, what are you watching, buddy?
Oh, I don't know, Patrick. You just went through a lot of different things. I guess one of the things I would say that I love to watch is the bond market, but I guess we'll talk about that in the skin in the game section.
All right. Well, there you go. You got great insights there, buddy. Anyway, I think that's where we'll wrap it up for Talking Charts.
Okay, Patrick, it's time for me to have a little snooze when you do your This Week in Trading History. So what do you have for us?
Well, this week, we're going to go back to 1869. It was on September 24th of 1869. It was one of the original Black Fridays where Jay Gould cornered the gold market. And so let's get into this. So the Black Friday gold panic of 1869 was caused by a conspiracy between two investors, Jay Gould and his partner, James Fisk, along with Jimmy
Fisk.
Jimmy Fisk, with a small-time speculator, Abel Corbin, and his wife, Jenny. Now, these weren't your average business folk. Jay and James were financial masterminds running the Erie Railroad during the height of the railway boom. And Abel was a small-time speculator who married Jenny Grant, the younger sister of the then president, Ulysses Grant. And so strap in because the story gets epic. So let's start with Jay Gould. He was the mastermind at gaming the system and generally known as a robber baron in the Gilded Age. Even during his life, he was known as one of the great villains of his era. He earned his success through co-founding ventures, then taking over his partners, and then leverage to buy out distressed assets, usually by his doing. A historian said Gould's nature was similar to the survival of spiders. He spun huge webs in corners and in the dark. He seemed to never be satisfied except when deceiving everyone as to his intentions. And so Jay's partner at the Erie Railroad was Jim Fisk, and they were a shady duo. At one point, they used stock fraud and bribery to keep Cornelius Vanderbilt from taking control of the Erie Railroad. Now, because of the government's dependence on gold, this is where we're going to get to the story, especially during the American Civil War, it was considered unpatriotic to speculate on gold. But that didn't stop the Wall Street scoundrels from forming a special gold room where brokers could trade mainly in the basements of Wall Street. So they created their own little exchange secretly on there to do gold underground. Since there was only around $20 million in gold in circulation at any given time, Gould wagered that a speculator with a deep enough pockets could potentially buy up huge amounts of the precious metal until they have cornered the market, and from there they could drive up the price and obviously sell it for a huge profit. Through history, cornering a market was a big thing, right, Kev? Like it's the legends out there, the Jesse Livermores, that was the big pride to do that, right?
Yeah, and it happens all the time now. People get squeezed, they get a short sale, and we get situations where all of a sudden you can corner the market. And when you see one of these squeezes happen, you realize that the money that you can make is immense.
Oh, for sure. And so there was just one man in Gould's way, and that was the President of the United States. Ulysses Grant was trying to stabilize the government by using massive gold reserves to repurchase greenbacks from the public. So if Gould tried to corner the market, Grant could simply order the Treasury to sell a huge amount of its gold and drive the price through the floor. So Gould befriended Abel Corbin, the former Washington bureaucrat, who happened to be married to Jenny, the president's sister. And so quid pro quo, Gould deposited a cool $1.5 million in gold in an account under Corbin's name, and Corbin then used this influence to install an insider, General Butterfield, as the U.S. sub-treasurer, who would warn him of any impending government sales.
That's a great last name. Butterfield. Sure. If I could come back, well, I'm going to come back as a Butterfield. I like it.
And so Corbin then cozied up with Grant, and they tried to persuade him that gold prices would benefit U.S. farmers, because they're trying to do what's right for the U.S. farmers, right, Kev, who sold their harvests overseas. And this is the government's responsibility to do this, right? So he coordinated to anonymously author an editorial in the New York Times claiming that the president had revised his financial policy of selling gold. Eventually, the manipulation paid off, and Grant announced that he wouldn't sell gold over the next month. Jay Gould and a few other conspirators had been secretly stockpiling gold since August, and learning that the fix was in, they disguised their identities behind an army of brokers and proceeded to gobble up all of the gold that they could. Fisk, a co-financier, bought $7 million of gold and led the charge. Gold began to rise, and in August, a $100 gold piece sold for $132 in greenbacks. But only a few weeks later, the price had spiked to $141. In the gold room, rumors swirled of the plan, and the short sellers suddenly found themselves caught in a vice. Many began calling for the Treasury to intervene by selling its gold reserves. Fisk and Gould kept quiet, as they owned a combined, get this, $60 million of gold, 3 times the amount of the public supply in New York.
Whoa.
So they leveraged up and cornered this thing proper. But Grant was on high alert. And it wasn't until Corbin checked in with a letter urging Grant to stay firm, and that he knew, then suddenly did Grant realize he was being played for the fool. So Grant responded with a threat to break the corner. Gould was stunned. But a true robber baron fashion, he neglected to divulge the new information to his partner Fisk or the other partners. Instead, Gould began selling his position as fast as he could. It was on September 24th in 1869, the day known as Black Friday. The gold room's indebted short-selling speculators walked to work like men on their way to the gallows. Gold had closed the previous day at 144.5, but shortly after trading resumed, it took a tremendous leap to $160. Unaware that the jig was up, Fisk kept on buying, saying that gold will soon be at 200. Meanwhile, in Washington, President Grant met with the Treasury Secretary and decided to open the vaults and flood the market. On the open, the Treasury sold $4 million worth of gold. Within minutes of the news, gold dropped from 160 down to 133. The stock market joined in and dropped a full 20%. Foreign trade grinded to a halt. Wheat and corn dropped 50%. These ripples from Black Friday affected the U.S. economy for several years and blighted the rest of the Ulysses Grant tenure as president. As for Gould and Fisk, they used their political connections to weasel out of jail. They even avoided paying out their losses by saying the brokers made trades without their knowledge. And as for Gould, his last-minute fire sale netted him a cool $12 million of profit. Gould went on to be a railway mogul, wreak havoc on Wall Street, and artificially drove up prices of goods and services across the country for the remainder of his life. As to Fisk, he was shot in the head in a lover's quarrel over a Broadway showgirl. It just goes to show you don't know. It's not what you know, but who you know you can offload your positions on. Right, Kev?
Patrick, that took a really dark turn at the end. It's going along. It's fun. I'm learning about this.
And then James Fisk, he takes it in a lover's quarrel.
I'm just like, whoa, where did that come from? I was not expecting it, Patrick. Not expecting it. Way to keep it lively, bud. Great story.
All right. Hey, it's time for
No stupid questions.
But
Just
Lena has to
stupid
come on.
answers.
Just stupid answers. Lena,
Yes.
you got to take over here.
So the first question from one of our listeners for both Kevin and Patrick. This has been touched upon in the past pre-COVID, but would like to revisit given Fed's new agenda. As a millennial, the biggest concern I have is I am buying into a Fed-induced rally that will end the same way as the Nikkei in the late 80s and early 90s. Why is this line of thinking right or wrong?
Well, Kev?
That's a lot to pack in there.
It is. Well, you can go. I'm sure you're going to give your bearish view, and I'll try to give the other side.
Well, there's always a chance that it ends like Japan did. But, I mean, really what it comes down to is the dilution factor of monetary policy. Like, I mean, if they open the printing press, it's just the way Cuppy comes on and talks about Project Zimbabwe, right? I mean, the nominal prices don't have to go down if you're basically flooding the system with money. And so a real implosion of prices, this asset deflation, needs there to be a real scarcity of money. There has to be something that breaks within the system. And so it doesn't have to end the same way as it did in Japan. But, I mean, there's certainly a long, rich history of there being these things that come along the way that cause those events, right? How would you interpret it?
Well, one of the things I would say is if you're looking at this as a long-term investor, what are your alternatives? Now, you might say that the Tina approach to investing, there is no alternative, is not a good reason to buy stocks, and I completely agree. That isn't a good reason to buy stocks. Having said that, if you put it into cash or bonds, and we do get inflation over a decade or two, what you're going to find is that your value of that of your wealth will be, eroded through inflation.
And what I want to point out is that it's the definition of inflation, because a lot of people think inflation is the general rise of prices, but I look at it as monetary dilution, right? It's where you're basically destroying money and owning things that are not getting destroyed while money is being diluted is the whole premise of that inflation. Is that your version of inflation too?
No, that's your monetarist view of inflation, but that's fine. It works for now. But one of the things I'll just put out there is that yes, stocks are extended right now, and they do look scary, and it makes a lot of sense to approach the kind of next little period with caution. But if you're thinking about a longer term, like how could you justify this from the bull side? If we have a situation where the government goes and starts to do a true MMT fiscal stimulus and continues along, then really owning real assets and stocks are a real asset, is the only way you're actually going to keep up.
Yeah.
And I'm not saying you should buy stocks. I'm not saying you should rush out and do it, because one of the problems is that there's a lot of deficit hawks like Patrick out there that think that this is a problem, and it depends on who wins the day. And
I've been labeled.
You're a deficit hawk, and if it ends up being that the deficit hawks win the day, then you're absolutely right. We could get a situation where we have 5-10 years of this, just terrible growth in the stock market. Look what happened to Europe when Europe decided to try to balance their budget. They try to balance their budgets, and they go and they do fiscal kind of restraint with monetary ease. And so they put rates lower and lower and lower, and they somehow think it's going to work, and it doesn't. So you're absolutely right to be worried about that possibility, but you should be watching and trying to determine what you think society is headed down and which way they're going. And if you think they're going towards a world where they're going to spend more and they're going to do more on the fiscal side, then I think that you, if over the long run, need to be in stocks.
What it comes down to, Kev, I'll just summarize this. You have to bring your education level up to a level of understanding how the macro system works. And then you just have to be eyes wide open. It's predicting what they will do is impossible. It's about recognizing what is happening. That is where you can take all the defensive actions, right? And
I completely agree, Patrick, because like everyone, although I am an inflation, I guess, bull, if all of a sudden I saw that the kind of deficit hawks were winning the day, I would change my stance. Right. I would change my stance, and I would actually, you might even find me buying bonds if that was the case.
Oh, you poor thing.
Yeah.
All right.
Anyway, next question.
All right. Next question. Lena, go for it.
If you have $500,000 to invest, discuss the notion of investing it in $2,500 increments across 200 different actively managed mutual funds. The idea being you're likely going to end up in all the same stocks, but you've diversified across the quote-unquote best and the brightest stock-picking minds as they enter and exit positions. Assume for this question, expense ratio can be held to 0.75%.
All right.
I feel like I'm trying to read a math question from
absolutely.
high school.
And so what's guaranteed is that if you diversify that way, that you will end up getting the best and the brightest, but you'll also diversify into the worst, and you're going to get a performance right in the middle, and your overall performance will be 75 basis points less than the index. Is that a fair way of putting it?
Well, Patrick, I'll be even more kind of despondent about this idea than you are. On the whole, more active managers underperform the index than outperform.
For sure.
So
because of the fees.
Not just the fees, Patrick. Even without fees, they underperform.
Yes.
It's not just fees.
And so this is where I like this picture. This you were the first one to share it on or retweet it on Twitter. I saw one on one of your retweets, but it just tells a story that literally large cap managers, they have a benchmark, they have a mandate, and their job is to deliver on their mandate. What they do on their personal accounts is completely different than what they're doing is delivering a product, and they have huge career risk if they can't go and take outlier risks and diverge from the performance of all their peers. Otherwise, they're going to lose their jobs. And so there's so many other things that is not just their skill.
So for those who aren't watching this and Patrick didn't explain the picture, it's two men at a urinal. One guy's on the left taking a whiz, and the second guy's walking in, and the guy on the left taking the whiz is the benchmark. And then the guy walking in decides to take the urinal right beside him, and that's the large cap manager. And for the ladies that are listening, all four of you, there's an etiquette that you do not go right beside a guy, especially when there's all sorts of different ones, right? Like available. So this is just to say that it's kind of creepy and he's hugging the benchmark. So going back to the question, though, I think that if you go and got a lot of different managers, you would be dooming yourself to underperforming the index. And at that point, I would say you're better off just buying the index.
Exactly. Just buy the index. I mean, if you're diversifying to that magnitude, there's no point in not just buying the index.
Right.
Because if you actually believe one manager is capable of creating the alpha, then you need to get that concentration benefit of putting a larger allocation to that manager to get the edge on your call on that manager. But once you diversify it to 200 of them, there's nothing. There's nothing.
That's right.
Anyway, next question. And it's a question for Lena. Lena, read your own question.
This listener asked me, how did you get involved with these two fools? Do you feel that you learn anything from them? If you had to pick Kevin or Patrick to manage your money, who would you pick? And I have to pick one. This is a bit of a trap, I think. To answer the first part of this question, how did I get involved with these two fools? I don't even remember. I just remember, I don't know how. I kind of stumbled into it. I might have been drunk when this happened. That's kind of what it comes down to. I am trying to learn as much as I can from these two. A lot of it is a little bit too technical for me, so still trying to hang in there. But most importantly, if I had to pick Kevin or Patrick to manage my money, this is a difficult question to answer because I think I'm going to have to take a career risk here because I am employed by Patrick, so I feel inclined to
career. See, this is exactly what money managers fall into, right? Like Lena, you are demonstrating exactly the problem with large cap managers is a career risk. So go ahead and demonstrate to everybody what career risk means. Who would you pick?
Well, if I don't pick you and I go, you know what? I think Kevin's going to manage my money way better. I'm going to go with Kevin. Then I have a possibility of losing my job and not having any money to manage.
I think you should pick Kevin because you always trust the guy with less hair. Like it's a matter of experience that comes, and the hair loss is a very good thing of that you're a seasoned trader.
Patrick, you know what? Yeah. That crazy theory of yours reminds me of my theory. I have this theory on squash. Like I play squash, which I know is kind of a douchebag sport, but anyways, if you're playing a guy and you go to another club and you're playing everyone, and one guy has an English accent, you don't pick him. You do not pick the English accent. Okay? And then if he's from India with an English accent, you just stay away from him. You're just oh, I'm going to get crushed. Not a chance.
All right.
But, there's another reason why I would pick Patrick over Kevin.
Uh-oh.
I have known Patrick a little bit longer than I've known Kevin, and I have some materials that could be considered either collateral or blackmail.
Oh my goodness!
Materials for Patrick.
Oh no!
So
oh my God!
Much easier for me to get Patrick to manage my.
Oh, there you go. Okay, let's move on quickly.
Final question.
This listener wished to be remained anonymous. Is there some secret knowledge in the Bloomberg terminals, or is it just a boomer version of Discord where people share newspaper clippings and leaked memos? P.S. If you found this a worthy question to answer, please don't say my name on air. I'm paranoid about getting fired because my employer thinks I'm a moron.
So, dear anonymous, you're not the moron. The people that are paying up for Bloomberg and paying the $26,000 US a year, they're the morons. Having said that, I have a Bloomberg terminal.
You have a Bloomberg?
Yeah,
Yeah. Why do you think I'm so keen to have Rob Coifin on and have him beat Bloomberg and give an alternative and get it down in terms of the pricing? In all seriousness, Bloomberg is, unfortunately, it is kind of the standard amongst the professional investment community, and one of the things that ends up being is this listener actually highlighted the fact that the DMing of people is actually really important. You can get on there and DM almost anyone else who has one, right? And now often they'll just ignore you, especially when it's me trying to get a guest for Macro Voices. When Patrick is asking me, but. Having said that, Bloomberg, it's a love-hate relationship. There's some things that are absolutely terrific, and there's other things that you're just going to be that's not worth the bread, and I completely understand anyone who thinks it's a boomer's version of Discord. A great way of describing it.
All right. Well,
Except
Lena,
that
why
I'm
don't
not Except I'm not a boomer.
you-
Patrick
I
and
don't
I
think
are
the
Gen
listener
X's.
meant you're a boomer.
Yeah, Patrick and I are Gen X's.
Zoomers.
I look like it because I'm bald, but Patrick is definitely looks more like a Gen X.
All right. Lena, tell them where they can submit questions.
Well, if you have any questions that you'd like Kevin or Patrick to
Or Lena
answer,
now.
That's
well,
right.
or me, apparently. There are no stupid questions, so submit your questions to nostupidquestions@markethuddle.com.
All right.
Nice.
Thanks, Lena.
Thanks everyone for writing in. Okay, Patrick, it's time for my favorite part of the show. Skin in the game.
Yeah, baby, this is it. And so
This is
before we get to it, let's just quickly explain the rules and how this works.
Okay, so Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to be settled by next episode, and the currency for the wagers are as follows. Number one, a Duke and Duke, which is the $1. Then it moves up to a pint of beer, a burger bet, a pitcher, a case of beer, otherwise known as the 2-4 in Canada. Bottle of wine, none of this cheap shit that Patrick drinks, $100 limit though. And finally, the granddaddy of them all, the steak dinner.
There is actually one extra one. There's where we can go from like the ludicrous speed to ridiculous or whatever the way it works. There's one more, but we're not going to disclose what it is. It's only for special occasions. We may never use it. You
never told me about that. But anyways, okay, let's go on. Let's talk about last week's bet.
All right.
Okay.
You won.
So last week's bet was Patrick had to present to me a kind of a bet, a wager, and it was going to settle today at the close, which is Thursday. And what he did was he tried to take advantage of the fact that I'm a bond bear to get me to say that the yield would go up. And so it was basically the 10-year Treasury yield will close Thursday night at, Patrick was above 70 basis points. I chose below. Okay. So Patrick was unfortunately, he tried to trick me. He did a terrible job. He whiffed. I was worried about the stock market. So I basically said, okay, a week, I can have the bond market go up for a week. And so I bet. And unfortunately for Patrick, he lost. And
again. But I didn't like my side. So we kept it very friendly.
That's right.
And it was a Duke and Duke. I am going to deliver that one crisp US dollar bill to you.
That's right.
And you won. It's done.
That's right. The other thing that we didn't say when I was telling the rules that we should explain is the winner of the bet is obligated to create a new bet for the following week. Okay. And then all wagers are settled in full and there will be no netting of positions.
Yes. It's so important. We're not
Except
netting.
I just said the winner of the bet. It's actually the loser of the bet creates a trade for the next week.
Right.
Okay. So what do you got, Patrick, for me this week?
So I'd like to stay with bonds, but we're gonna take it a little bit out the risk spectrum on there, and I want to talk high yield. And so so here we have the high yield bonds, and what I want to talk about again, we're using Koyfin. Rob Koyfin has just created a great platform here, and so we've seen corporate bonds just turning. They just began their little their turn off the top, and really what we've seen is Treasury bonds are pinned obviously by the Fed, and they're not going to go anywhere, especially not in the 5 or less year yield. I mean, once you go a little farther out, they'll move. So when credit spreads widen, it means that the market is pricing greater risk for the low grade debt, and we saw an uptick here on the credit spreads on junk bonds to 547 basis points. And so it's a 3-month high on this credit spread. And I'm just going to do it straight at 547. It closed at 547 right here. Next Friday, the bet is, are we higher or lower on the credit spread?
Oh, that's a good one. Patrick, you got me, because you know what? I don't know. That's a good one. By the way, no, we don't know them ahead of time. Okay, so just to kind of make sure I got it straight in my mind. High yield spreads close higher or lower at the end of next Friday.
So you see how it says 547. We're betting our credit spread's going to have widened or narrowed off this level.
You bugger.
547.
I'm going narrowed. I don't want to, and it pains me to do it. You got me. I'm going to be the side that you want.
Perfect.
I'm taking narrow.
Okay, so that we're starting Duke and Duke.
Yeah.
I'm taking you up to a pint of beer.
Done. I'll go up to a burger bread.
I'll take you to a pitcher.
Oh, I don't know. I don't know how strongly I feel about this. I'm going to leave it at a pitcher. That's about my level of conviction.
Pitcher of beer.
There we go.
You know what? The first one was a burger bet or a pitcher. It was also a pitcher. Was it?
I think it was a pitcher. Yeah, we're going to be able to have
so
a lot
we're going to be. And there's no netting out trades, so we actually now have to find a time to drink two pitchers. We're gonna have to soon. We're gonna have to have listeners volunteer to come and help us finish these pitchers.
Well, except that unfortunately we're getting the vid here in Toronto, so it's not going to work that well over the short run. So maybe we could just mail it to
All
people.
right.
We can Zoom together. We'll send people pictures, and we'll just sit around drinking and have a drink fest.
on a Zoom call. There we go. Sounds good. So again, we're talking, and just to be clear, we're using the U.S. high yield broad. So we're not going triple Bs. I just want to make sure this is clear, right? Because we could have done triple Cs or double Bs.
Okay, so whatever this koi fin one is, we're going
koi fin, but we're using the high yield broad, right? And 547 is our pivot.
Okay, done.
Okay,
done.
All right, good stuff. I like it. Pitcher a beer it is. All right. It was a good show.
It was a good show.
We wrap this up.
Okay, so let me grab the part that I need to say here. You can listen to the Market Huddle on all of the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch us on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get the latest content. And please, if you could, rate and review us on iTunes. I know it's a dumb game, but it makes a difference to Apple's algorithms, and it helps us out immensely. Patrick, where can they find you?
You can find me at Patrick Ceresna on Twitter and at bigpicturetrading.com, where we have the subscription service. So where can they find you?
I'm at Kevin Muir on Twitter, and you can check out my newsletter at themacrotourist.substack.com. If you're interested, please just send me an email, and I can send you some samples of recent posts. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
Oh, that was a good show. That was good. We even have Taylor in here for
Taylor
the very
in the
end.
house.
Taylor's in the house.
Taylor in the house. Yeah. I'm excited and here.
Let's
have some fun.
We would have talked about a WTF clip, but it was Lena's fault, so we're just going to leave it at that.
It was my fault. I accept full responsibility.
But we promise it will be back next week.
That's right.
Right? Taylor?
We'll be back next
Taylor's 100%.
It will be back. It will be 100%. Now the quality of it, that's the real X factor here. So we're going to see how it turns out, because even I don't know how it's going to go. Could be terrible. And if it is, Lena's fault.
It'll be my fault. So. Well, the girls got to move, So it is my fault, but...
By the way, Lena,
I'm excited to move. So.
Safe choice with the career risk line. I like that. It was you made the safe choice. I was initially thinking, do I have to fire her? And no, she recognizes it's all good. We're good.
You know what? I dare you. Let's go there. I dare you.
Oh my God.
How about that?
Oh my God.
Okay, this beer's definitely going straight to my head.
Oh my God. Oh, the entire 4.5%. This is a light beer.
Yeah, this is a light beer compared to the last few that we've been drinking.
Okay.
Or that I've had anyways.
Speaking of beers, why don't we review this bad boy?
All right. Yeah, let's do it.
Lena, you start. Ladies first.
This was, what I think of this beer is it's drinkable but not impressionable, if that makes sense. It's not like something that I'm like, ooh, I want to go grab that beer, but if it's around or if it was given to me or, if I just needed a beer, I think this is, it's good enough for any, to replace any other
Yeah.
beer, but it's not something that I'm like, okay, I'm really craving this Radio Tube Pilsner, that sort of a situation. So
Yeah.
I would give it a 7.3.
Lena, you sound like when I was young and what the girls would say about me: likable but not impressionable. I'm going to kind of echo Lena's, thoughts. It comes straight down the middle, giving it a 7.5. It's
Pretty good.
yeah,
All right.
not Patrick.
So I am going to go on a little bit higher. I have much more positive things to say. See, for me, I don't know, like maybe I'm just late to the game, but I didn't start drinking IPAs and all these other special beers until the last decade, right? So for most of my youth and my not youth, but like my teenage years going into my 20s, I only drank standard kind of pilsners and lagers and stuff like this. And so when I'm drinking this pilsner, on a relative basis to the types of pilsners I drank, this is a fantastic pilsner. This is a great fresh drinking beer. I would buy a 2-4 of this, no problem. And have that in my fridge. I like it. I'm giving it an 8.5, and it's good. I'm going to be a little more positive.
You
than
said
you
a 2-4. You've said like a 6-pack of beers before.
No,
but never
because this is
2-4. That's-
sessionable. I'm using the word, Kev. I used it
God.
again.
You always use it. Basically, every beer.
It's
is
sessionable. No, it's not. Not every beer is. But the thing,
What does
Whoa,
sessionable mean?
whoa!
What does
The
that mean?
millennials asking us. This is wow! Like this is a big deal. I actually feel
Yeah,
good.
now you have to explain.
Yeah.
All right, so sessionable is basically where you could just buy like a 6-pack of it and sit there and drink the same beer over and over again the whole night. Like you can, versus a lot of the kind of more craftier beers, you're like, oh, that's nice, but I'm only gonna have one, right? And so when to me,
Patrick,
a part
but
of my
let's be real
rating,
here.
but part of my rating is that I picture myself as that, like, would I honestly stock my beer fridge with this? And that, so whenever I use the sessionable word is where I envision myself actually stacking a shitload of these beers in my beer fridge. And that is Radio Tube's Pilsner. I would stock this. That's it. I'm done. Someone
Taylor.
else
I
talk.
like how you said beer fridge because you actually have a fridge dedicated to
I
beer.
do.
Yeah,
I
for
do.
sure. So, Taylor, according to justbeerapp.com, what is a session beer? In short, a session beer is a beer that contains no more than 5% ABV, which is alcohol by volume, and features a balance between hop and malt characters and finishes crisp and clean. Session beers are known to have high drinkability.
Interesting.
Yes.
Your standard beer, you could say.
I guess
Session
so.
beer's your standard beer. Well, my review of this beer is I'm still pretty much living in an Airbnb cottage on the lake. I haven't seen anyone new.
We don't know
in
what you look like
months.
anymore.
So, yeah. Well, I
What?
have hair again. I have hair. Yeah, I have hair, lots
You-
of hair, and I got a
What?
abs now.
He's
Pretty
basically
sweet.
like got
Yeah.
dreadlocks going. He looks like that Tom Hanks character that lives on an island and talks to the volleyball.
Castaway. Well,
That's what Taylor's
Yeah.
doing. He's just talking to the
Yeah, I
volleyball.
got Wilson. Yeah, so it's been pretty life-changing here, except that I don't get the beers anymore. So I just kind of drink in tandem or parallel with you guys, and I'm drinking a Great Lakes Brewery Vienna Lager Pilsner. I don't know, the can's over there because I smashed it because it's my only beer of the week. And it's one of those, my review is I needed a beer this week, and that was a beer. And that's all Daddy needs, you know what I mean?
There you go.
He really is.
Terrible. It's
Taylor,
just
I think
funny.
you're turning
Is
into
anyone-
Patrick a little bit.
Okay,
What?
so listen,
What?
I'm reading a little more about this sessionable. Patrick's got me on a rabbit hole. Okay, like
Oh, no.
like many modern beer drinking trends, the idea of session beer starts with the British, of course. Most things with beer and drinking start with the British or the Irish.
Yes.
It is said the earliest drinking beer sessions started during World War I, when English factory workers were allowed to imbibe on the job during 2 daily sessions. So not only did you have one beer break, you had 2.
No.
Oh my gosh.
Well, that's how work gets done.
Yeah. Oh, here it is.
You know,
according to the Beer Advocate, there was one midday drinking session, 11 a.m. to 3 p.m. I hope that wasn't like the whole session. And then there was one evening drinking session, 7 to 11. During these 2 sessions,
How late are these people working?
I don't know. During these 2 sessions, artillery shell production workers were allowed to drink low ABV offerings. The thinking being that this was what they could still focus on their work and not get too disorderly.
For artillery.
While being a whole lot happier on the factory line.
well, you know what? That's how I got my cottage built, right? Like I literally, the guys that would come out and help me build the cottage, we basically, there was a beer an hour. That was the rations. And so like, and now they were the bottles of beer, not the cans. But no, actually, no, that's not true. We switched to cans later on. But yeah, that's the way the cottage got built. So you know, you want to put in a 10-hour day, you had to have 10 beers for each guy.
Oh, wow.
Nice.
At least you got your cottage built.
I know. You know what? It's just the right amount of beer when you're working and sweating and stuff like that. You got a buzz, but you don't get hammered, and everyone's happy working, and that's the key. You got to keep everyone happy while they're working, so the cottage gets built.
Yeah,
if
so-
you don't give them the beer, they won't build you the cottage.
Well, it can backfire, though. I had a friend a few years ago that moved into a new condo and was like, oh, I'm going to have a painting party. And I said, well, what the hell is a painting party? Everybody can come over, grab a roller. Everybody's going to paint walls. I'll provide the booze. Everybody just has to show up. I'll provide all the supplies. You guys are just going to come and hang out, have some beers, and help me paint my place. A few hours later,
All right.
you could only imagine what was painted or lack thereof, and everybody was just
Getting
everybody
hammered.
was just drunk.
I thought you were going to say,
And
being a
nothing got
millennial, I
done.
thought you were going to be like some weird mushroom tea or something like that you guys got all stoned on.
Oh no! I'm not that kind of millennial.
Oh, yeah.
No.
Okay.
Yeah, no
okay.
mushroom teas for me.
Your mom doesn't listen.
You guys haven't
Your
done
mom
mushroom
doesn't
tea
listen.
yet?
You're okay.
That's right. No mushroom teas for me, and my mom doesn't listen.
Okay, so listen, we have to talk about, I don't mean to change the subject, but I'm going to change the subject. We have to talk about something. Everyone has to give a certain member of our group a huge round of applause and kudos for actually watching a show.
Yes. I'm literally clapping. I'm so proud of you, Patrick.
Woo! Woo!
Patrick went and watched The Social Dilemma. He figured
That's
out
right.
how to use Netflix. He's like, what is this strange thing? You mean it
You
doesn't
know,
come in my cable box? Oh, I can hook it
It's-
up to my cable box. I'm okay.
No,
I
you probably like,
I
posted this?
actually have a remote control that has a Netflix button built in. And I just learned how to use it. I literally like Netflix, and it's like, what's this? It's like it was so weird.
And he watched
I've been paying for this.
Yeah.
Yeah, exactly.
So he watched
So,
it.
what did you think of it?
Yeah, it makes me realize how foobarred everything is. It's
Yeah.
and it's funny. Like I walk into my living room, and my kids are like sprawled all over the couches on their phones, and I'm like, "Hey guys, why don't we try putting the phones away for a little while?" Oh, that doesn't go well. It does not. That does not go well. I'm like, oh, they have a point. I get it.
It's true. I find that like Twitter is just like a black hole that can suck you in and just, nothing good comes of that.
It's like a love and hate relationship with social media, though, right? Like,
And
it's nice to communicate and get in touch with people and get a pulse of what's going on, but at the same time,
That's
it
true.
also
Lena, it's not
sucks
all
you
bad.
in
You're
and-
right. You're like, to be fair.
Yeah, it's not all bad.
Yeah, it's not all
but,
bad. But it's easy though to slip and to turn into I see some of these guys on Twitter that Fintwit like kind of gods, and I see them and I'm like, what the hell are they doing? Spending hours arguing with some guy, and I'm like, don't you have something better to do than this? Like, I'm actually kind of flabbergasted at the at how, well, let's just say kind of elevated their status is, and yet they'll sit around arguing, and I'll be like, go do something with your life. Like, I feel like giving them a wake-up call. But anyways.
But I think people do that to stay relevant.
I don't know. I think they do it because
Like
they
top
have.
of mind
I think
sort
that
of
they're
thing,
just
right?
as bad as Patrick's, 17-year-olds.
Well, there's that whole discussion or like stat. It was of people on social media, only like 8% or 6% or whatever it is are influencers, but 40% of people think that they're an influencer, that they think that what they say and do has an impact on other people, when it's really
They're
only
just
like
delusional.
8%.
That's funny.
Yeah, everyone thinks like they're the star of their own movie. So today I'm out on this beautiful backyard, and I'm working on this patio, on this table, and it's really nice, and the crickets are around and all this stuff. And there's this guy on Twitter who's I'm really into like Toronto real estate, and he's like, oh well, this thing, and I'm like, come on, guy, are you like living in a hole? And he's like, so I got in this thing, and I'm all typing like a machine, and Cheryl comes out, and she's like, what are you doing? What's like? And
He's
I'm like,
wrong.
this guy, he's like.
He got under your skin?
He's wrong. And she's like, yeah, just go and do something else. You got a busy
He's
day.
wrong.
And I was like, yeah,
There's
but
someone wrong
this guy's
on the
an
internet.
idiot. He doesn't know. Yeah. So I showed him. Let me tell you, he hearted my reply, and that means I think that's a win. It's a win in my books.
I like people on.
I never really understood the whole argument.
I like people on Twitter that make fun of themselves and just can laugh about it all.
Oh, hence you.
That's
You're
you.
talking about yourself. I love that.
No,
it's like,
but I just
you're
like,
just like, I like people just like me.
No, but I do. I don't like people that take it too seriously and want to fight. I don't want to fight with some guy on the internet. Like I wrote a whole piece about this. Someone disagrees with me, fine. Go put on the trade the other way. I need someone to trade against.
Yeah.
I have no desire to convince anyone. I don't have any reason to convince you. I don't want to change the world that way. I just want to have some fun. And I just feel like for example, Rudy Havenstein, he is 184 years old, but he's amazing on Twitter. He's the central banker in charge of the Weimar Republic, and how he's I'm just kind of shocked that someone that old got the hang of it so well.
It's amazing.
But
I'm sure he's got a PR person.
but he's awesome, and he is the funniest guy, and he just makes me laugh. And I think that he's I would love to have Rudy on the show. If Rudy would ever come on the show, I would love to talk to him, because I think he's just funny, and he brightens my day all the time with his crazy tweets
And 184 years old at the same time.
That's right. And to me, that's what Twitter's about. I want to go on and I want to feel like, oh, that made me laugh and stuff like that. And yes, I use it to communicate with people as well. But I have no desire to get in fights with anybody.
Yeah, nowadays especially with, heated debates about social unrest.
But Lena, it's just
politics
I
and
worked on a trading desk, and for us, we realized that we need someone on the other side of our trades. So we never got upset with it. I see there's some famous US dollar bulls and bears, and they all argue about things, and they take it so seriously and stuff. And I'm like, just state your point, put your position on, and that's all there is to do. One of you will be right, one of you will be wrong. It's just you're not going to actually convince anyone. And I find this whole kind of desire to prove someone right, wrong or right, it's a waste of time. Because the other thing
I
is,
totally agree.
even when you're actually right, do you think anyone actually remembers it? I'll tell you. So I got on the show with Patrick cheats on me with another podcast, right? I'm very upset. He seems to he actually called me a name the other day. He got my name mixed up, and he actually had to.
It happens. You've never been in bed with your significant other, and you accidentally scream out the wrong name.
No, that's why I only date the people that have the same name as my wife. And so he accidentally called me this other name, but I'll just remember when I went on to his show, when he got me onto his show with his other partner, that just makes me feel bad. And And I got on there and I was bullish in the stock market, and I was lucky enough, like even the blind squirrel finds an acorn every now and then. I managed to time it right, and I got bullish. And you should have seen the hate mail I got from the kind of the minions, that were were very negative on the stock market at that time. And it takes every ounce of my kind of will to not tweet it back to them. Because they were so mean, and they think what, am I not a human being? So I have a different opinion. Sell it to me. But you don't need to be mean. I don't really get it. If someone has a different opinion,
you're drunk and you just need to rant.
No, but
this is what's happening. You are
but listen. So
this
Patrick,
is like Kevin on the couch. This is Kevin on the couch.
Patrick,
tell me how you really feel.
But Patrick, you and I disagree all the time. We just go, hey. You know what?
All the time.
I don't go
how do we both make money when we both disagree with each other so often?
Because trading is like that. Trading doesn't have to be, this thing where only one of you can be right and the other one can be wrong. Trading is a very personal thing. It's like, drawing a painting or cooking a meal. Everyone does it slightly different.
All right.
Anyways.
But I think people just love to be right? That's what they want. They want to make sure that whatever they say is right, and I think that's where it gets tricky.
But screaming at someone is not going to make you any more right. Not only that, you think they would remember that they were fucking wrong.
I guess the moral of the story is I was right today
coming
on
back
Twitter.
And going, I tweeted this really miserable thing to you at the Lowe's. And I told you were an absolute idiot, and but guess what? I was the idiot. No, I don't. Strangely, I haven't got any of those tweets back, and I'm still waiting for them.
It's a lot like there's that saying. It's like you're the girl or guy who you're dating who broke your heart, and they dumped you. They don't think about you at all. You might think about them. They do not think about you. And you're just like, oh, okay, yeah.
So don't
okay,
waste your time.
Yes, I remember
don't waste your time or energy.
Okay, well,
somebody once
Don't
told
reminisce.
me, always ask yourself, would you rather be right or would you rather be happy? And that's a kind of a question that I always go back to. If somebody's upsetting me or they're trying to put me down or whatever, it's like, would I rather be right or would I rather be happy and just shut it off? Then I don't really understand when people, comment either on YouTube or Twitter or any platform where they just have a negative comment. I don't really understand. If you don't like it, just move on. It doesn't do anything, right? I don't really understand and buy into that sort of behavior of people just negatively commenting about somebody else's opinion. It's like, why do you care so much?
This moment of Zen is brought to you by Lee. Okay, well, I'm gonna go. I don't know what I got eating today. It's not as good as usual, but I gotta go eat at 6 o'clock.
It's Thursday. So
What?
I don't know.
What? You need to eat? Anyway, listen. Yeah, we recorded the show early. It was on Thursday, and but we're back to the
my
normal.
fault.
It's Lena's fault, and we're going to go back to the normal schedule. I only like to drink on Fridays.
Yeah. And next week,
any other day that ends with Y.
That's right.
And
by the way, next
Anyway.
week's gonna be a great week. Looking forward to it. I have a feeling that
I'm not going to say anything else.
we won't say who it
Yeah,
is.
we're not gonna disclose.
We
it.
won't disclose it, but I haven't met him yet, and I'm looking forward to it. We've conversed back and forth. I'm a big fan, even though
He's a great fan.
though he might be a little on the Austrian side, I still love him, and I'm looking forward to chatting with him.
All right, I agree.
We'll leave it at that.
Okay.
Take care, everyone.
Okay. Cheers, everyone.
Thanks for tuning in.
Have a great weekend, everyone.